Hello again traders, Andrew Curry here, and I've had another good look at that Great British Pound US dollar triangle pattern, and now the candles are giving away even more good information about the nature of this triangle pattern. If you want to understand triangle patterns and breakouts and how to read the candles, what they're telling us, stick with this video. Let's have another look under the bonnet. So I'm revisiting this triangle pattern from my last video. This is the Great British Pound US dollar. And yesterday the candle that was printing was this one here, 12th of June, 6 o'clock. That was where we were up to. Now, looking at it now, what we determined from the last video was, of course, we have a strong level here, but a growing bullish pressure, as shown by the fact that the retracements are smaller each time. And hence that forms into this triangle looking pattern. So look at what's happened subsequently. Really interesting. Confirms that this is a strong level being faced with a strong bullish pressure. There's quite a battle going on here, right? And this is extra confirmation of this. How do we know that? Well, look what happened. This candle here, big green candle, pushed right through where my line is. Now, it's first glance you go, well, it's broken through the line. Okay, it's pushed through. Yep, it's broken out. There's the breakout. But actually, no. Because remember what I've said in some previous videos, structure is more like a zone than a definitive line. Now we draw a line on there for simplicity, okay, so we can understand the idea. That's a line, market tries smash past it, there we go. Lovely simple narrative, right? Market won't smash past this point, or if it does, it'll take quite a force. What happens in reality is, like I say, it's more like a zone. So you see this candle here, right? Let's get the arrow on here. This candle here, right, is our high point, lovely high wick on that candle, okay? So if we just draw across here, right, straight line across there, okay, so that's the point we need to break past in order for this to be a true breakout, right? Why do we need that? Well, okay, so the market has pushed up, but not pushed up beyond the range we are already in. A way to think about this, okay, is if you're going to lose weight, okay, so rightly or wrongly, I know we use metric measurements, but a lot of people measure in stones and pounds. And I think, is that 12? For Alexa, how many pounds to the stone?
Good morning, Andrew. 1 stone is 14 pounds.
Right, so it's 14. You see, I don't even know imperial measurements off the top of my head, right? It's like somebody who's losing weight saying, I've lost 2 pounds. Okay, just regular fluctuation throughout the day when you haven't had anything to eat for a while. You might fluctuate several pounds. So it's not really significant weight loss to say, I've lost a pound, I've lost 2 pounds. I've lost half a stone, so that my weight is regularly fluctuating within this lower range rather than the range it did. That's weight loss. The markets are a bit similar, okay? Pushing past a little bit, that's not really a breakout. Pushing past a significant range and closing beyond our previous high point, which in this case is this candle, this wick, that's a significant breakout. So although it looks like a breakout because I've put a line across, and it's, you say, lovely and easy, pushes past that line, it's a breakout. That's not quite true. We haven't really pushed past the range at which the market was hitting. Incidentally, when we're saying, is this a strong level? Well, we have massive confirmation here that at the moment this is a strong level and a strong bullish pressure, right? Which we dived into in the last video. But incidentally, look here, 1.36000. So even if I didn't know by looking at the evidence that this is a strong level, you always tend to find a 0 number tends to be a strong level. And sure enough, we have a strong level around here, clustering around this 1.36000 point. It's clustering around the 0 point. But like I say, levels are much more like ranges, right, than my definitive line. Now, a good friend of mine, who I learned a lot of from trading, always says technical analysis books are just junk. What he means by that is they demonstrate the theory. They say, well, here we go. I'm going to draw this line and it's going to hit this line like I'm doing now, right? Let's not say what I'm doing is junk. Don't misread me. What I'm saying is it's important when you're learning that someone conveys this to you simply. But in the real world, it's not quite that simple. So what my friend means is the books give you the most straightforward textbook examples of where the market behaves perfectly and closes on the line and pushes past that line beautifully. In the real world of the markets, we don't always get that. You have to take that theory, so it's necessary to have a simple line to learn from and have a nice point to identify. But in practice, once you get to the markets, you have to apply it with real world messiness, right? And it's a similar sort of thing in driving. People say in driving, do this, the textbook. In Britain, it's the highway code, right? Which says you should drive like this, this, and this. For example, on motorways, it says you should stick in the left-hand lane and you only use the right-hand lane for overtaking. But anybody who's been driving knows that's not the case. People get in the right-hand lane and they're staying there. Why do they do that? Well, because they don't want to get back in the left because the left moves too slowly for them. So in practice, they stay in the right longer than they should. So it's all right in theory to do that. You have to have a set of rules, but in practice, you get onto the roads and you see it's not quite like they say, and you learn from experience of the roads. This is what a lot of traders struggle with. They want to understand the theory. They understand, someone explains with a straight line, etc., etc. Really easy to understand. And then you get into the real world of the markets and it's messy. And unfortunately, there is an answer to that problem, but it's time and experience at the markets. Now, when people say that, it's not a very satisfying answer. But it doesn't mean time. You're going to have to spend the next 25 years doing this, and it's just going to have to be time. You're just going to have to... No. It just takes... You learn the theory, you learn the real world of the demonstration, and that's like many professions, right? Things don't behave exactly like they should. Things aren't cut exactly to spec, and so on. It's just about time and experience with the markets, and I hope that's what I'm showing you here. You know, we're looking at the theory, but we're also looking at actual charts and how it plays out in reality. So how it plays out in reality here, to get back to this, is we have a breakout here, or do we? Well, no, I would say we have not got a significant breakout. A significant breakout would look like that, as in, not necessarily that point, but my point is it would get significantly past our most recent high point, which of course now is here. The high of that candle, okay? That's what an actual breakout looks like versus what you could call a fake break. It sort of pushes past but doesn't quite reach critical velocity. That's a physics term, isn't it? If a rocket pushes up with enough force and enough speed, it eventually leaves the Earth's atmosphere. If you don't, if you just chuck it up with a little rocket thrust, it goes up, it falls back down. This is not the markets hitting escape velocity. But what it does show us is that, if we have extra confirmation, if ever we needed it, we already had a lot of confirmation that this was a strong level. We already saw strong and growing bullish pressure. But even this growing pressure nearly broke past, didn't quite do it. So this is a really interesting triangle pattern. Interestingly enough, it's broken past a little bit with this fake break, retraced, and what we see now is an even higher lowest point, assuming this is the lowest point. It looks like the market's going to retrace back up and try for this level again. Even though it's been battered down, that strong pressure is still growing. This is a really interesting triangle pattern to watch.